Well, it depends. The original idea behind the robots that Tesla cranked out was to attack the 3Ds, dirty, drudgery, and dangerous. And that's good. And I've never really seen one of these things live and in person working, but I did see a video on a guy's phone when I was in Texas, in Austin. Now, the video was probably 3 to 5 minutes long, and it showed me a vastly different robot than what I saw from Tesla.
It's starting to look like 2024 is going to be a hot year for EV makers. This year, electric vehicle manufacturers may have to battle it out in terms of market share, profit margins, and revenue. In fact, this is going to be a game of survival of the fittest.
When, again, back to Ford leading kind of the big companies in the right direction, saying, we're going to use a Tesla charging system. And the reason for that is because they work all the time. And right. I don't have to fool with that, and that's not my core competency anyway. So now, with people having access, at least with Ford, and well, actually, almost all of them now, except for Volkswagen and a few others, everybody has access or will have access to the Tesla, the North American charging system. That gives the world a whole different perspective on range anxiety, which I never bought into anyways. I mean, I went crisscross to 8,500 miles and did it in 11 days, and I never had any range anxiety. I don't know I don't know where that ever came from.
Sure.
But it was obviously some marketeer, not a real person.
So as we wrapped up the last quarter, BYD started to get the edge on Tesla in terms of sales. Going into 2024, presumably BYD is one of the OEMs that we'll be keeping an eye on. Is there anyone else in industry, any other OEMs that you would see as posing a significant challenge right. versus Tesla, for example?
Well, what we need to do occasionally is look at somebody else's data, and this, by far, is one of my favorite charts out there. I've shown this about a dozen times, and this is from Car Industry Analysis. These guys did a great job, and you can see here that Geely's got 25 different EVs in the marketplace right now, all over Europe, all over China, all over South America, all over everywhere, right? Coming in second is Stellantis. Now, we don't see much going on here in North America, but then I've kind of predicted that Stellantis is probably going to abandon ship on North America. Their headquarters is for sale right now. They want to get out of that. I haven't heard anything about a new 300 or what are they going to do with the Ram and the Charger, or sorry, not the Ram, but the Challenger and the Charger. I haven't seen a Ram truck that's going to compete with a Lightning, and I can't even hardly imagine it competing with the Cybertruck. So what's happening? So we were talking about predictions. I believe that Stellantis is probably going to move Jeep and Ram somewhere else, probably China. And I believe that they'll just kind of like diminish their involvement here in North America.
One of the primary reasons for Tesla's unparalleled success is its technological superiority. The car company has consistently pushed boundaries when it comes to EV tech, offering vehicles with impressive range, advanced autonomous driving capabilities, and a robust charging infrastructure. The automaker's relentless focus on research and development has allowed it to stay at the forefront of innovation, making it extremely challenging for competition to catch up. Tesla's expertise in battery tech, electric drivetrains, and even software integration has all created a significant technological moat that's hard for other companies to bridge. However, it is important to note that while Tesla is often seen as the leader in the EV industry, there are other notable companies making significant strides in electric vehicle technology as well. The EV market is rapidly evolving, and competition among manufacturers is continuing to drive up advancements in the industry as a whole. So what does this future hold for the companies that are involved in it? And more importantly, what is 2024 going to look like? In this video, car expert and Tesla bull Sandy Munro gives his opinions, and this is what he has to say.
pundits, if you want to call them that, have said competition is coming for a long time. And recently, we see China's BYD surpassing Tesla in electric car sales in the last quarter of 2023.
Yeah, in the last quarter. But if we look at this little chart, we can see here that for the whole year, Tesla sold more than BYD did.
Right.
However, BYD did beat Tesla in the last quarter of last year. Now, what does that mean? Well, in my interview with Elon Musk, I said my prediction is that BYD will be the biggest car company on the planet. That isn't just in EVs. I mean, it will take the place of Toyota and Volkswagen and General Motors. They will not have a chance against BYD. No way, no way. So you look at that, but when you say just the last quarter, it's also important that you keep track of what happened for the whole year. This is the same thing as when all the financial analysts said, oh, the third quarter, the EV sales have gone down, oh, this is it. And, sell your stock or sell short and all this other. When you get into these kinds of things, you have to take a much longer view of what's going on than just that.
Right.
And if we look at last year, we're looking at how many EVs were sold percentage-wise, and you look at this year, and if you read the Wall Street Journal or Bloomberg or what have you, it comes along giving you the impression that EVs are all done. It was a fad, it's gone now. Let's get back to, gas guzzling whatevers. At the end of the day, it's not really that way. Actually, what you do is you look from year to year instead of day to day, and you'll find out that, hey, EVs went up quite a bit this year.
Sure.
Next year, I believe it's going to be even more. And I believe about halfway through the year, you're going to see people saying, well, we shut that plant down, or we cut the production at that plant, but I think we're going to be pumping that back up a smidge.
The future of the car market holds significant potential for growth and transformation, driven by various technological advancements and charging preferences as well as changing consumer preferences. Several factors like the transition to electric vehicles, the advent of autonomous driving, the integration of smart features, and even the expansion of markets in developing countries are all indicating a growth trajectory for the car market over the next few years. Hey guys, welcome back to Tesla Tomorrow. The car market is predicted to keep growing at a CAGR of 3.71% between 2020 and 2030, and will consist of 122.83 million units by the end of the decade, representing a significant leap from 85.32 million units in 2020. Before now, cars used to be simple and antique. However, in these modern times, cars are becoming increasingly connected, and they offer advanced infotainment systems, navigational services, and internet connectivity. The integration of smart features and connectivity options enables for a seamless interaction between drivers, the vehicles, and their surrounding environments. This connectivity paves the way for enhanced safety features, real-time traffic updates, and personalized driving experiences. As consumers seek more integration and technological advancements in their vehicles, the car market will see continued growth in this direction. So how huge is this car market going to be in the near future? And what factors will foster its growth? Keep watching to find out. But before we carry on, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. The shift towards EVs is expected to continue and gain momentum in the future, with increasing concerns about climate change and the need for sustainable transportation. Governments around the world are implementing policies and incentives to encourage EV adoption. Over the last decade, a variety of support policies for electric vehicles were instituted in key markets, which helped to stimulate a major expansion of electric car models. Asides policies, developments around several countries has also facilitated a rise in the level of car usage. For instance, developing countries, especially in Asia and Africa, are expecting rapid economic growth and urbanization. As a result, the demand for personalized mobility is on the rise in these regions. And this represents a significant growth opportunity for the car market as more people in these emerging markets enter the middle class and aspire to own their own vehicles. Advances in battery technology are also improving the range and charging infrastructure, making EVs more practical for everyday use. This transition to EVs is likely to drive substantial growth in car markets, as traditional combustion engine vehicles are gradually phased out, and this is why Tesla has positioned itself to take the largest share of the pie.
People used to complain about the Model S Plaid especially, oh man, this doesn't really work. I think the next thing that Tesla should do is put, if they can, put the drive-by-wire into the Model 3.
Sure. Yeah, I mean, as we talk about competition, and we'll get into cost a little bit further down the list here, but it's one of the things that's when we're looking at ways to take out costs, steer-by-wire is definitely one of those.
And weight.
And weight, absolutely.
Yeah. And actually, there's a whole bunch of features and functions that you get by steer-by-wire, that people don't take into account when they're making a determination. So when you start fooling, as you know, when you start fooling around developing a new product, there's always somebody that's going to say, well, how much is that going to cost? How much is that going to cost? But they don't usually look at the cause and effect that some of these things happen. So you've got steer-by-wire, which means that basically I'm going to take the whole steering gear and all the other muck that goes along with that, a big long shish kebab pole that comes from the front of your car, right pointing at your heart. So I'm a big fan have been a big fan of getting rid of mechanical steering for a long time, and because we work on aircraft. The F-18 doesn't have anything like that. The F-35 doesn't have it. None of the big commercial airplanes say, oh, steer by wire. Why is it we can do it on a huge plane, but we can't do it on a small car? And mostly it's because people were afraid of the cost, but they didn't take into account everything that goes along with it. So the weight goes down. When weight goes down, that means efficiency is going to go up. It means that you're going to go further. The electronics are going to move faster and more reliably than what you're going to have with a normal vehicle. And it basically allows me now to have an AI kind of driving experience. If something comes along, some people have I have very quick reflexes. For an old guy, we had a little thing going on here, and somebody bumped a cup off the edge of a table, and I caught it before it hit the ground. That's the exception. It's not the rule. Somebody my age shouldn't be able to catch that, and it just happens. Some people are lucky, but most people are not. And having steer-by-wire means that as the sensors pick up the potential for an accident that's going to happen, instead of having time to only scream, your car could steer itself out of the way.
Yeah.
Tesla has achieved remarkable success in the EV industry by focusing exclusively on this segment. The automaker saw this opportunity to transform the transportation sector with EVs, while many conventional automakers considered them to be a marginal niche. Tesla invested all of its resources in developing its EV technology, streamlining its supply chain, and enhancing its user experience, which gave it a distinctive edge over the competition. The car company's dedication to innovation is also evident in its gigafactories, which are advanced manufacturing plants located strategically around the globe. These plants produce batteries, electric motors, and other essentials which allow Tesla to integrate vertically and benefit from economies of scale. Tesla can also ensure quality control, lower costs, and increase efficiency by managing the entire production process. Tesla's dominance is further supported by its extensive supercharger network. The automaker understood early on that a reliable charging infrastructure was vital for the adoption of EVs, and it eventually provided a supercharger network for its car owners that offers fast and convenient charging options and enables them to travel longer distances and avoid range anxiety. Tesla has a clear advantage over the competition due to its expansive network and ongoing efforts to improve charging speeds and coverage. And Tesla's brand is associated with innovation, luxury, and sustainability. Its vehicles have a sleek design, cutting-edge technology, and an eco-friendly image, which have all drawn a loyal fan base and created a strong brand loyalty. Basically, the automaker can change a premium market on a dime by charging a premium in the market, and then sustain high demand in spite of growing competition due to its powerful brand recognition. But While we do believe in Tesla's leadership and how it is leading the EV market, well, that is unquestionable. And it is important to acknowledge that other automakers are increasing their EV initiatives, even though they are struggling to keep up.
You know, going back to, you had mentioned closer to the intro, this dynamic kind of attention right now in the news and everywhere else. I know Detroit Free Press has talked about Ford, for example, saying, you know, only half of their dealerships, I think it's just over 1,500 or something, are going to sell ICE and hybrid only, right? They're not going to sell EVs.
Yeah.
What's your reaction to that, and what do you think that sort of indicates in the market today? Maybe it's more indicative of dealerships and how they operate. I'm not sure.
Well, there's an adage about you know, the tail that wags the dog, and I think that that's what's happening right now. The union is a tail that's wagging the dog. The dealerships are the tail that's wagging the dog. And when you follow the rules, or sorry, not the rules, but if you follow the dictates of the servants, the master is going to fail. Simple as that. That's the way it works. When the worm turns, your ability to figure out what's going to be the right way to go is going to be hampered. And the reason for that is because the people, let's use the unions, they're looking at, hey, I want more money. Okay, so what impact is that going to have? We won't sell as many cars. Well, we want more money. Well, as we can't sell cars because they're too expensive, then that means that we won't need as many workers.
As more consumers offer to go for electric vehicles because of their eco-friendliness, advanced tech, and government support, some auto companies are struggling to keep up. Toyota, Ford, and GM are among these companies who slashed EV sales projections for 2023 and beyond, facing various obstacles, uncertainties, and things like that. And we think that long-term, this could give Tesla, the current EV leader, an opportunity to widen its gap over the competition. One of the major factors that's dampened the EV sales outlook for some auto companies is the worldwide shortage of semiconductors, which are vital for making EVs. Toyota, for instance, has reduced its EV sales forecast by almost 40%, from 202,000 to 123,000, due to the drop in the Chinese market, where the chip shortage has heightened the price war. Toyota is cutting its EV sales forecast, even though it estimates record growth for this financial year, and it plans to focus on hybrids to evade the price war in the EV market. The car company still expects to sell 9.6 million vehicles this fiscal year, but with a smaller share of EV sales. Another factor that's led some auto companies to pull back their EV plans is the shipping disruptions caused by the pandemic, which have raised costs and risks associated with moving vehicles around the world. Ford, for example, has postponed around $12 billion in EV manufacturing investments and pushed back its 600,000 EV production target for another year. And GM has also delayed the production of some of its EV models to preserve pricing. The reality is that Tesla is the only automaker not struggling at the moment from lower pricing. Ford recently retracted its full-year results forecast and cautioned other companies of ongoing pressure on EVs. The auto company lost an estimated $36,000 on each of the 36,000 electric vehicles it delivered to dealers in the third quarter, more than its estimated $32,350 loss per EV in the second quarter. In July, Ford CEO Jim Farley, during the company's second quarter earnings briefing, announced that Ford would slow down the ramp-up of unprofitable EVs, shifting investment to its commercial vehicles unit, and it also announced plans to quadruple sales of gas-electric hybrids over the next 5 years. This shows that Tesla is the only company that is thriving in the EV market. A third factor that has prompted some auto companies to adjust their EV sales forecasts is the limited battery production capacity, which limits the availability and affordability of EVs. Battery makers like Panasonic and LG Energy Solutions have alerted of an EV market slowdown due to the lack of battery supply and increasing costs of raw materials. Because of this, some companies like Honda and Ford have scrapped plans to make affordable EVs, while other partners like GM have also said this because of battery challenges. So why do we think this could be a big deal for Tesla? It's simple. The fact that some auto companies are cutting their EV sales forecast could be a big deal for Tesla, as it's going to give the automaker an opportunity to expand its market share and strengthen its leadership position in the EV industry. What do you think? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.